In today's video, we're going to break down what infinite banking is, why the wealthy use this concept, and how you, as an XRP holder, can use it to become your own bank. All right, so what is infinite banking? Infinite banking is a financial strategy where you use a whole life insurance policy to become your own bank, allowing you to borrow against the policy's cash value to fund expenses or investments while still earning interest inside the policy and growing your wealth tax-free. That really sounds too good to be true, right? Well, it's not. And the reason for that is the US allows for the mixing of insurance products and financial products. So why would the wealthy use this? Well, they built the policies. The wealthy use the infinite banking strategy because it does a lot of things. One, it provides tax advantages. It guarantees growth of the cash value of the policy over time. It allows access to liquidity without all of the restrictions that come along with traditional loans from banks, and it enables them to build wealth while maintaining liquidity and control over their money. So this strategy ensures that generational wealth passes to the next generation through the death benefit on the policies. And you might be like, okay, well, what is the death benefit? The death benefit is the amount of money paid out to the beneficiaries of a life insurance policy when the insured person passes away. And so this is a really effective way to pass these assets or these investments to the next generation tax-free without going through probate and all the other fun stuff that happens if you have a will. But how would that work if there's a loan against it, right? So like that's the whole point of this. You're able to borrow against the cash value. Well, you can use something called reinsurance. And this can be structured to cover the outstanding balance of the loan and ensure that the full death benefit passes to the beneficiaries untouched. It can be achieved by purchasing an additional insurance policy or even a rider specifically designed to cover the debt, effectively protecting the policy's assets for the intended heirs. All right, so that's cool. You know, we've figured out what infinite banking is. We know why the wealthy use it. But why does this have anything to do with XRP holders? Well, here's the two options that you could use as somebody invested in XRP to leverage the same strategy with this asset if it gets to the values that we all are hoping for. So the first one of those is you borrow against the asset itself. Maybe you use a DeFi protocol, or you could work with digital wealth partners inside of institutional custody there. They just got the first loan done, a 7-figure loan to one of their clients. And they provide a lot of protections around that loan that you're not going to get with a DeFi protocol. And we'll run down some of that here. So stay tuned. All right. So if you work with digital wealth partners, you'd sign up as a client, go through KYC, fund the account, move your assets over. And then they have strategic partners that they work with to allow you to borrow against the assets there inside institutional custody, where they're not rehypothecated, they're not moved around, there's no chance of loss. Obviously, you still have to service the debt on the loan. They typically see somewhere between 30 and 50% LTV or loan to value. So as an example, put up $2 million, you could borrow $1 million against it. That would be 50% LTV. And you could use those funds however you wanted to, right? For more investments, personal expenses, your lifestyle, or to fund other opportunities. Maybe you want to start a business. As long as you're making the repayments on the loan over time, you're good. And you're not going to have any issues unless there are a few things that could happen, right? And that's because of the volatility in the market. If there was a drawdown in XRP's value, you would have to move funds in there to top up the collateral. If it became low enough, you get first right of refusal and be able to buy those assets back before they were liquidated onto the market. And those are some of the protections that Digital Wealth Partners in particular has negotiated on the terms of those loans that you're not going to get with the DeFi protocol. They're just going to liquidate you. And so, you know, you get a lot of the benefits of infinite banking doing this. You're going to get the liquidity against your XRP without having to sell it. And it's pretty fast, not a whole lot of paperwork, and you get, you know, not a whole lot of transactional cost either. The only other problem here is the interest rates on this are not low. They're currently in the mid to high teens on the APY. And again, that's just where the market is. We've got US interest rates here at, 4 and 5%. And so people that are looking to put capital to work and lend it out, they want a decent return on it. And so I think that's going to be the case for at least a little while longer until we do see adoption of these digital assets. If we do get a tier 1 designation by the BIS of XRP, then those probably come down substantially. And that would be great for people that are borrowing now because they'd be able to refinance those loans at lower interest rates later. So that's option 1. So let's get into option 2. Option 2 would be to fund a private placement life insurance policy with your XRP. So some PPLI providers accept cryptocurrency directly. And depending on their structure and jurisdiction, that is possible. We do have some partners that we're looking to be able to provide that for. And these are designed for high net worth individuals, and they can accept alternative assets, just like cryptocurrencies, private investments in companies, real estate. Anything from your investment portfolio could be moved into a PPLI policy, depending again on which jurisdiction and where it's structured. So you invest this in the policy, the premiums are paid into the PPLI policy, and they are vested and segregated separate of whatever account you originally had at Digital Wealth Partners. This would be something separate that would be managed. And the reason for that is there are certain stipulations around how that portfolio is structured. There's percentages that have to be maintained, and there's some diversification that is required. But as we continue to get more structured products on top of XRP, you've already got the ETFs that could be going live here in 2025 if the SEC case will ever end with Ripple and they approve them. You've also got Grayscale's Trust. You've got the ETP there in Europe. There's a lot of derivatives that we're seeing, and structured products that are being built around XRP. And so you can maintain exposure to the XRP and still meet the diversification standards within that policy if you worked the financial magic that they're working on over there at Digital Wealth Partners. So the invested premiums would grow over time, increasing the cash value of the policy, and voila. Now you have a huge cash value inside this private placement life insurance policy that you can borrow against. And that would come from the insurance carriers. And it would be at a much lower interest rate than what you currently get today for digital assets. And it would likely be at a higher LTV than what you're going to get just working with a DeFi protocol or lender. So what are some of the other benefits of PPLI policies that you're not going to get if you just borrowed against your XRP directly? Well, again, you're going to be able to pass these assets to your heirs tax-free upon your passing. And that's going to shield them from the income tax and the capital gains tax if the XRP is used to generate yield inside the policy over your lifetime to continue to compound and grow that cash value. So that's kind of the way that I'm leaning. I'm thinking we're going to go personally with the PPLI policy on the other side of appreciation here. The downside is it is going to take a little bit more capital in order to get one of these policies funded. So right now, it's going to be about $5 million that you have to have just to get this started. So I know a lot of people that may be watching this now are like, that sounds really good. But I don't have $5 million in XRP to get that going. Well, if we do see, $100, $500, $1,000 XRP, I'm highly confident that in the not so distant future, many people that are holding XRP will be able to take advantage of that solution. If not, just be able to borrow against their XRP, take that liquidity, and enjoy that tax-free for whatever purposes they decide. So I hope you enjoyed this. Hopefully this was valuable for you. If it was, please like, subscribe, comment below. Let me know, how are you going to use your XRP and borrow against it? What do you want to invest in? And how do you want to live your lifestyle post-appreciation? And with that, we'll see you guys on the next one.